It's difficult to exaggerate the severity and importance of these events. Not since the beginning of the First World War has our banking system been so close to collapse.
Mervyn King was at the epicenter of the biggest exercise in crisis management in modern financial history. He was in charge of the Bank of England in 2007 when the credit crunch struck, responding by slashing interest rates to near zero and pumping billions of pounds into the economy. Joining me on Leaders with Lacqua, former Bank of England governor, economist and author Mervyn King. Lord King, thank you so much for speaking to Bloomberg TV. It's always a great pleasure. What lessons have we learned from the financial crisis?
I hope we've learnt the lesson that this was a lot bigger than just a financial crisis, that it represented a serious problem in the world economy. Not sure that everyone sees it that way, but I think that's the most important lesson. I think secondly, we've learnt that we need to worry not just about the amount of equity capital that banks issue, that we need to limit their leverage, but we also need to tackle the problem that banks are inherently unstable, and if people lose confidence in them, they take their money out or they don't roll over their lending, and we need a mechanism for dealing with that.
Did we see early signs of it, or were we late to the game?
I think we saw certainly signs in the world economy, and I think we should have perhaps given more weight to the rise in the leverage, the borrowing of the banking system. But of course, at that point, the banks themselves were deeply reluctant to admit that what was going on was not sustainable.
At what point in the financial crisis, or the lead up to the financial crisis, did you think there was something seriously wrong here?
Well, I gave a speech before the crisis erupted in 2007 at the Mansion House in London.
Ignore the unsolicited emails that rained down on us offering unwanted credit. I received one last week that began, "We have the solution, Mervyn, for your bankruptcy." Excessive leverage is the common theme of many earlier financial crises. Are we really so much cleverer than the financiers of the past?
And that was not a welcome statement. People thought, well, we are wiser than people in the past. Well, it turned out we weren't. Now, I don't think it was ever easy to say that a particular level of leverage was going to generate a crisis, and there's an element of randomness in these small events that triggered the crisis. But it was pretty clear, I think, that the system as a whole was in some serious trouble.
So with hindsight, would you have done anything differently to placate this non-confidence?
Well, I think the things that we had to do were well known in the UK, been identified before. One was that we didn't have a resolution framework to deal with the failing of a bank in the UK. Every other G7 country had one. We didn't have 100% deposit insurance, and that was bound to mean that once a bank run were to start, that it would be rational for other depositors to join it. And these things were well understood and well known. I don't think that made the judgment of whether we were about to go into a banking crisis any easier. What we knew was the system wasn't as resilient as it should have been.
Hello, I'm Rashad Salamat and we're bringing you a special report on northern Iraq, the subprime fallout that's spreading across the Atlantic to the United Kingdom.
There's been panic in the streets and who knows whether your money is going to be safe.
Well, I do want to transfer my money.
The queues that formed outside northern Iraq represented the first bank run in Britain in 150 years. Depositors were demanding their money back after it was revealed the lender had tapped the Bank of England for emergency funding. The run didn't stop until the government gave a taxpayer-backed guarantee that all existing deposits were safe. Would you have done things differently for northern Iraq?
We did support the bank. We were the lender of last resort, right up until the point when it literally ran out of money and couldn't actually give us any collateral to lend against. So the thing that's odd about that is people somehow seem to think we didn't lend to Northern Rock. We lent a vast amount to Northern Rock. And the very first conversation I had with the chairman of Northern Rock in August 2007 was one in which I said, if it comes to it, we'll be there as a lender of last resort. The problem was that Northern Rock, which was not doing anything that other banks were not themselves doing, had a business model which ended when the market in mortgage-backed securities closed. And they had a very high leverage at that point, even though they met all the international capital standards. So it wasn't as if Northern Rock was somehow taking big risks with the definition of capital that the international Basel standards said they should hold. It's just that the structure of the bank, which was basically borrowing short and lending mortgage lending, meant that they weren't required to hold very much equity capital, and that's what made them very vulnerable. And it was, you could draw a timeline and you knew when the bank would run out of money, and it did at exactly that point. And I remember when the government appointed Goldman Sachs to help them find a way of selling Northern Rock, that actually when I met Goldman Sachs for the first time, we both agreed within a few minutes that the only end result was nationalisation. But it could, if we'd had a resolution framework, Northern Rock would have been dealt with over one weekend, and it would never have been the news story that it became. So after the failure of Lehman Brothers, it was pretty obvious that there needed to be a coordinated signal that we would do whatever was necessary to keep the world economy functioning and at least keep the financial system going. So I think the move in October 2008 originated in a telephone conversation between Ben Bernanke and myself. And I said to him that I thought it would be a good idea, since we were probably all considering cuts in interest rates, that we would coordinate it. So we agreed that he would speak to Jean-Claude Trichet and I would speak to some others. And in the end, it became a G10 movement. And it took about a week or so to put together. We changed the time of our normal meeting so we could announce at exactly the same time this coordinated interest rate movement. And indeed, I remember that we all informed our politicians, just before we did it.
And I think the House will want to know that the Governor of the Bank of England has just announced an immediate 0.5% cut in interest rates. He has done so in a coordinated action that is happening round the world, in which the US Fed has cut interest rates by 0.5%, the ECB by 0.5%, the Swiss, the Swedes and other members of the G10 have all cut interest rates, showing that global problems are best dealt with by global action.
So who knew about this? The 10 central bankers?
Yes, and obviously other people inside the central banking world. But we did not brief the political world, because that, I'm afraid, in the modern circumstance means inevitably a leak. And that was the one thing that would have undermined the operation.
Is that what makes the big difference between the central banks and the politicians?
Yes. I won't go into detail, but if I had to say what was the big difference between central banks and politicians in the crisis, I could talk to another central banker confident that it would be a conversation in confidence and it would be treated with discretion. I think that whatever discussions took place with politicians, they seem to end up in the media.
How did you cope with the financial crisis? What are the attributes that a central banker needs for working under pressure, extreme pressure?
Get the edge you need to stay ahead. Subscribe to Bloomberg Businessweek and receive 4 bonus issues free. Bloomberg Businessweek delivers in-depth reporting and provocative perspectives that take you inside the news each week. Bloomberg's 2,400 journalists worldwide dig deep for stories and insight you can't find anywhere else. Take advantage of this special offer. Order now to get 4 free bonus issues of the only business magazine powered by Bloomberg. Go to businessweekmag.com/TV offer.
Long before Mervyn King set foot on Threadneedle Street, he was an academic teaching in prestigious institutions, like the University of Cambridge, Harvard, and MIT, where his office happened to adjoin one belonging to then-assistant professor Ben Bernanke. In 1991, he brought his big thinking to the Bank of England as its chief economist, moving up the ranks to deputy governor, then to the top job. It was a long way from his humble beginnings in the English Midlands. What did you want to be as a child?
I wanted to play cricket for my county, Worcestershire. I would play for them the whole season, apart from the last week of June and the first week of July, when I would take 2 weeks off to defend my singles title at Wimbledon.
That didn't work out.
It didn't work out.
Are there parallels between sportsmanship and policy making?
Very much so. I think one reason I started a charity to encourage young children to play cricket and competitive sports is that it's a very good way to learn in a harmless environment that it's important to compete, but to have the ability, once the game ends, to be friends with people afterwards. I think in business life, it's very important for people to realize they are competing. It isn't just a happy game. You are competing against each other, but you can still have good personal relationships outside. You learn how to win and how to lose, something which some politicians have, but not all. And these are lessons for life, which are very, very important.
How did you get this love of sports? Did it come through your father?
Yes, I was growing up. My father was a school teacher. We moved around a lot, therefore, and I remember we lived in Yorkshire for a while, and we were living in a council house where it was next to the cricket ground, and I went to sleep as a small boy listening to the sound of the ball on the bat outside my window.
Does your family, did it have a big influence on you growing up?
Yes, and I think my father particularly, because he could have gone to university had his parents been able to afford to send him. And he couldn't. And I come from the lucky generation, people born in 1948, because we didn't have to fight in the war. My parents did. I went to an education that I had free of charge. I was sent to the United States on a scholarship. I paid nothing for that. Everything was worked in my favor. And young people today are facing a more challenging environment. They have to pay for their college education. Now, there are good reasons for that, because many more people go to college, and it's not obvious why the people who don't go to college, who by and large earn less, should pay for the people who do go to college, who thereby earn more later in life. But nevertheless, it is tougher for the younger generation. And I think it's beholden on the older generation to recognize that we will have to make some sacrifices to help the younger generation.
What's made you the central bank that you became? Was it academics? Was it studying?
I think it's a mixture of things. There's no doubt that my academic background was fundamentally important in being concerned all the time about what is the fundamental reason why this is happening, and have we seen this in the past? And I was much less concerned with the sort of moment-to-moment movements in financial markets, because it wasn't clear that actually meant a great deal. Some of this, it was a symptom of some deeper problem, and I was concerned to try and get to the bottom of it. And I think that was fundamentally important. I think the other thing was that a number of people I had known well in academic life, like Ben Bernanke, Janet Yellen, Stan Fisher, Larry Summers, they were all in policy positions. And so there was a natural ease of having a conversation about these questions. You know, Tim Geithner, who didn't have an academic background, but he'd been in the Treasury a long time. That was very important, I think, in Tim being able to interact with people around the world, because he knew them all. I think if he'd arrived in office only 6 months previously, it would have been very, very difficult. And he'd had experience in the Federal Reserve Bank of New York and then in the US Treasury. So I think the continuity there, knowing people, having had a long time in your career where you've had a chance to think through what you really believe about why banking systems are fragile, what causes disruptions, what's the right way to respond to it. These things were very important. And I think one of the problems that the political side had was that deep down they didn't really understand these issues. And they thought, my God, it's a crisis, we better find a way of dealing with it. But they weren't able easily to conceptualize the nature of the problems and therefore to come up with the right solutions.
How did you cope with the financial crisis? What are the attributes that a central banker needs for working under pressure, extreme pressure?
Well, one is, I think you genuinely need to know what is the right thing to do. And I think that both Ben Bernanke and I benefited from a study of financial history, which meant that the problems that were coming up were not unheard of. You know, we knew that these problems had occurred in the past and we knew what we had to do about it. So I don't think in that sense that we were reacting by saying, my goodness me, what is going on?
Their critics say central banks played a key part in inequality, right, by putting money out there.
So I think that's a misleading way of putting it. There's no doubt that in terms of wealth, by allowing interest rates to go to zero and by buying assets, that undoubtedly the apparent inequality of wealth distribution has increased. But that is only a temporary phenomenon that will last as long as interest rates stay very low. Now, it has an intergenerational effect. It's undoubtedly made life much more difficult for young people than for old people, because people who are buying houses for the first time now are likely to find themselves buying at the top of the market, and later in life when it comes to sell them, they will be selling maybe at much lower price levels of house prices relative to their incomes. So there is an intergenerational aspect. But I think that broad increase in apparent wealth inequality will reverse itself as interest rates get back to a more normal level, if we can find a way of getting back there. I think when it comes to labour incomes, I don't think central banks have any responsibility for what's been going on, because this is partly a function of technology, it's partly a function of trade and globalisation, and we shouldn't shy away from admitting that fact. And it's the failure of politicians to confront it and to say, yes, we think there are benefits to the country as a whole from having these cheap imports from China, but we must as a society do something for those who are losing out in this competition. And that's what we've been reluctant to do.
How do you explain Brexit?
So it looked as if there was a propaganda campaign going on.
For the Governor of the Bank of England, Sir Mervyn King.
In 2013, Mervyn King stepped down as Governor of the Bank of England after a decade at the helm. He'd helped steer the economy out of a financial storm, but he didn't stop sounding warnings that the world faced a new crisis unless there's reform in the financial sector. Where do you think the next crisis lies?
I would guess, if I had to, that it will be in the area of high amounts of debt, because the amount of debt in the world is larger today than it was 10 years ago. And I think the risk is that there'll be some defaults around the world which will not look coordinated or related, but actually they will have knock-on effects and lead other people to default. And I think once that happens, you may find that the banking system once again looks maybe over-leveraged or undercapitalized, because the losses that they will take as a result of these defaults will eat up some of the equity capital that they have on their balance sheet at present. And I think that's where we may see, we can see examples in China. There have been some defaults. There are within the monetary union in Europe. Greece has effectively defaulted from part of its debt in terms of the present value of its liabilities. And indeed, the banking system doesn't look very resilient in the monetary union.
What will the UK look like in 10 years?
I don't know, again, because I think there are big challenges facing the UK. I don't think myself that Brexit is the biggest economic challenge. I think the biggest economic challenge is that as a nation, we are saving less as a fraction of our national income than any other country in the G20. We're not saving enough to finance our pensions. We're not saving enough to finance care for the elderly. We don't seem to know how to finance the National Health Service. We still have a large budget deficit, and we have a large external current account deficit. The biggest risk to the UK on the political side is of muddled thinking.
On Brexit? Or on everything?
All these issues, both in terms of thinking that there is an easy way to improve people's living standards when there isn't, and in terms of thinking now that, we can all have a softer, cuddlier Brexit. And I think this just completely fails to cope with the realities of it. I think there are two positions you could take on Brexit, both of which are logically coherent, but neither of which seems to me to represent what most politicians are now saying. One is to say that we really do want to stay in the single market and the customs union, in which case that's effectively being in the European Union, and we should confront that fact and maybe I think politically the only way to deal with that is to have a second referendum and argue that we should reverse course.
Do you think we will have a second referendum?
That's a political judgment. I have no means to think. I think it's unlikely, but it is at least a coherent position to say that if we want to stay in the single market and customs union, then we should stay in the European Union. The other coherent position is to say, no, we have said we will leave. That means, as everyone made clear in the referendum campaign, that we would leave the single market and the customs union, that we are ready to do that. But having made that position clear, the UK would then be able to, first of all, announce its new UK immigration policy and say to our partners in Europe that we would like to negotiate a free trade agreement, at least in manufactured goods. That's a coherent position. What is not coherent is suddenly to turn around and say we are leaving, which is what was the position in the manifestos of both major parties, who after all increased their votes, and yet to say at the same time, but we really want to stay in the single market and the customs union. That is not a coherent position.
How do you explain Brexit? Why did people vote for Brexit?
Well, I think there were two main reasons. One is that it was crystal clear that the only way the UK could control immigration was to leave the European Union. The government had promised that it would control it. It had not done so, didn't seem to show much remorse for that fact, and most voters did want some control on immigration, and being in the EU meant that was impossible. And it was interesting that the government simply avoided the issue of immigration. It didn't argue for migration and immigration, it simply ignored it. And I think that was a very powerful motive. I think the second was that both sides talked down to the voters, and in a sense, the only thing that the two sides in the campaign had in common was a belief that anyone who voted for the other side must be ignorant or stupid or uneducated or even racist. And this actually did more damage to the government side than it did to the pro-Brexit side. And all the exaggerated statements about being £4,300 worse off for each family didn't have any traction because people knew that no one could be that certain. So it looked as if there was a propaganda campaign going on. And I think if the government had said, you know, this is a difficult issue, there are arguments on both sides, which is why I understand that some of our colleagues want to leave the EU and I'm in favour of it, but the unwillingness to admit that it was a complex issue with arguments on both sides, I think played particularly badly for the government side, because it played to the issue of trust. How can you trust these people when they're saying things that no one could conceivably know?
Lord King, thank you so much for your time.
Thank you.
Get the edge you need to stay ahead. Subscribe to Bloomberg Businessweek and receive 4 bonus issues free. Bloomberg Businessweek delivers in-depth reporting and provocative perspectives that take you inside the news each week. Bloomberg's 2,400 journalists worldwide dig deep for stories and insight you can't find anywhere else. Take advantage of this special offer. Order now to get 4 free bonus issues of the only business magazine powered by Bloomberg. Go to businessweekmag.com/TV offer.